This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Tuesday, July 21, 2026, and this is the New York pre-market. Now, let's get into it. Bitcoin is climbing towards $66,552, defying a fear and greed index stuck at 14 out of 100. That is a structural disconnect worth noting. Retail is terrified, yet the spot market is absorbing every dip. Good morning, I'm your host for the ShadowQuant Crypto Edition pre-market. Let's look at the data. Today's calendar is quiet on the macro front. There are no major central bank decisions or economic releases scheduled for the next 48 hours that will directly move crypto liquidity. The market is operating on its own internal mechanics right now, driven by legislative shifts and on-chain flows rather than Fed speeches.
That silence in the macro space amplifies the importance of the structural drivers we're seeing. With the VIX hovering at 1877 and equities offering no clear direction, crypto is isolating itself as a standalone risk asset class. The focus needs to be on the supply-side sharks and the legislative tailwinds we discussed in the briefing.
Turning to the headlines moving capital today. First, Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. Second, the U.S. Senate housing bill now includes a CBDC ban. Third, PayPay, 40% owner of Binance Japan, is seeking up to $1,100 million in a Nasdaq IPO. And fourth, Bitcoin futures demand has fallen to 2024 lows.
The Iranian outflow spike is the most immediate liquidity event. We are seeing a 700% surge in capital flight, and that money is landing in spot wallets, not derivatives. That explains why we see green candles despite the geopolitical noise. Meanwhile, the PayPay IPO filing for $1,100 million is a massive validation of the Binance ecosystem's liquidity depth. It suggests institutional rail integration is accelerating, specifically linking Japanese fiat rails to global crypto velocity.
But CIPHER, you are focusing on the inflow magnitude and ignoring the source quality. A 700% spike driven by geopolitical panic is not sustainable accumulation. It is a distortion. That kind of volume creates artificial support that vanishes when the news cycle shifts. Combine that with core scientific turning lower after disappointing Q4 results, and you have a landscape where infrastructure providers are rejecting the rally. The VIX ticking up to 1877 tells me equity markets are bracing for turbulence, and usually, that turbulence drags crypto down with it.
SPECTER misses the behavioral nuance here. The fear and greed index is at 14. That is extreme fear. But look at the breadth. Cardano is up 6.92%, XRP is up 4.04%, and Polkadot is up 6.09%. When sentiment is this low yet broad participation occurs, it means the sellers are exhausted. The market isn't scared anymore, it's bored. Boredom is the precursor to the next leg up. The 7-day trend is already rising from 12 to 14, signaling that the capitulation phase is ending. Let's dig into Bitcoin first. It is sitting at $66,552, up 295%. Grid, what does the technical structure say about this level?
We are seeing a textbook rejection of the bearish narrative. Bitcoin is holding above $66,552 despite the 2040 low futures demand. Technically, this is a V-shaped recovery forming on the daily time frame. The key is the Ethereum/Bitcoin ratio expansion. Ethereum is up 365% to $1,940.15, outpacing Bitcoin's 295% move. That widening gap suggests we are entering the early stages of an altcoin season, where capital rotates from the anchor asset into high-beta utility plays.
I have to push back on the sustainability of that technical picture, Grid. You are looking at price action, but I am looking at the void underneath. Bitcoin futures demand is at 2024 lows. There is no leveraged fuel behind this move. This is a spot-only rally. If the Iranian outflow dries up, which it will, eventually, we are left with a price level supported only by passive holders. That makes the $66,552 mark fragile. It's not a floor, it's a waiting room.
CIPHER hits the nail on the head regarding the lack of leverage. Add in the core scientific miss, and you have a classic dead cat bounce profile. Mining stocks, the most direct proxy for network security, are dropping. That is a fundamental stress test failing. The VIX at 1877 confirms that traditional finance is pricing in risk, not reward. This rally is hollow.
Moving to Cardano. Cardano is leading the pack at $0.1753, up 692%. Pulse, why is Cardano catching fire when sentiment is at 14? It's purely a rotation trade. The market is shedding pure store of value narratives for utility. Cardano and Polkadot are both up over 6%, while TRX is barely moving at 0.83%. Retail investors, who are currently terrified of macro instability, are chasing yield and utility. They aren't buying Bitcoin for safety. They are buying Cardano for potential alpha. The sentiment index at 14 is actually helping Cardano. It means anyone holding Cardano is underwater from recent months, so there is little overhead supply blocking the move up.
Technically, Cardano is approaching the 0.195 resistance zone. We need to see volume confirmation here to validate the utility rotation thesis. If Cardano breaks above 0.195 with sustained volume, it confirms the leadership change. However, if it stalls, the lack of futures support means a quick retracement. Same goes for XRP at $1.14. It's testing psychological levels without derivative backing.
Don't forget the regulatory catalyst here. The Senate CBDC ban directly benefits assets like Cardano and XRP by reinforcing their position as private, permissionless ledgers. The capital flight from Iran is also likely rotating into these high-velocity networks rather than staying in stable coins. The on-chain data shows increased activity on these chains, coinciding with the price action. It's not just hype. There is actual usage driving the bid.
Let's talk about Solana. Solana is at $78.50, up 238%. CIPHER, where is the flow coming from for Solana?
Solana is benefiting from the broader yield-seeking narrative. Monad's BTC bridge announcement mentioned adding $5 billion in Bitcoin-backed liquidity. That kind of infrastructure development attracts long-term capital. Unlike the speculative spike in Cardano, Solana's move is backed by active developer deployment and bridging activity. The on-chain metrics show reduced exchange balances, suggesting accumulation rather than distribution.
Accumulation, please. Solana is a high beta asset. When the VIX rises and equities wobble, Solana gets sold first. 238% is a nice bump, but it's not enough to offset the systemic risk in the broader market. The fact that it is lagging Cardano's percentage gain shows that even the bulls are getting cautious. Watch the open interest. If Solana continues to rise while open interest stagnates, it's a sign of weak hands stepping in.
Finally, Ripple. XRP is at $1.14, up 4.04%. Pulse, is this a legal win or just momentum? It's both. XRP has historically acted as a barometer for regulatory clarity. The Senate CBDC ban removes the threat of a centralized competitor, which structurally elevates XRP's value proposition. But technically, the 4.04% gain is significant. It's part of the same rotation I mentioned earlier. Investors are moving out of boring, low-volatility plays and into assets with clear regulatory defensibility. The fear index is low, but XRP traders are confident.
Visually, XRP is consolidating near the $1.14 level. The previous high was $1.14. Holding this level is crucial. If it breaks, we look at 1.20 as the next psychological barrier. But remember, without futures volume, these breakouts are prone to fakeouts. I'd want to see a daily close above 1.14 before committing.
Let's synthesize this. Grid flagged the Ethereum/Bitcoin ratio expansion as a sign of altcoin season, and CIPHER connected that to the CBDC ban driving utility rotation. But SPECTER and CIPHER both warned us that the foundation is fragile because futures demand is at 2024 lows. So, we have a market that is structurally bullish due to legislation and spot inflows, but operationally risky due to a lack of leveraged support. The narrative has shifted from speculation to infrastructure, as TD Securities noted, but the fuel tank is half empty.
So, here is the takeaway for the pre-market. Bitcoin is holding at $66,552, driven by spot flows and geopolitical outflows, not derivatives. Altcoins like Cardano and XRP are leading the charge, fueled by the Senate CBDC ban and a fear index at 14. The risk is that without futures support, this rally is thin. Watch for volume confirmation on Cardano's approach to 0.195 and XRP's defense of 1.14. If those hold, the rotation continues. If they fail, the lack of leverage could lead to a sharp mean reversion. Thanks for joining us on the ShadowQuant Crypto Edition pre-market. Keep an eye on the Senate bill progress and the PayPay IPO filing timeline. This has been a factual analysis of the data as of 9:19 Eastern Time. Have a productive trading day. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.